Prateek Agrawal joining us now, Business Head and CIO, ASK Investment Managers. Okay, Prateek, good morning. Let's talk about how you're perceiving the current market move, particularly in the global context. Every day we have a whole host, a really long list of what could be perceived as bad news, but markets seem to be steady at the moment, and we're actually at those record levels. So what's the next step from here? How do you see things panning out?
Yeah, so as the last year changed, it brought with it a realization that the peak growth in profits in two large economies, US and China, is probably behind us, and that is making investors in these two markets, in terms of asset allocation, may be accounting for close to 50%. And have done very well, so that 50% may be looking like 55% to be reallocated to other spaces. So it is not only us, but whole of the emerging market pack which is seeing a sea of green. That was the case from the beginning of the year itself. End of Feb, we had a peculiar situation wherein rest of the world was up and India was one of the very few markets who were down. We were down like 2%. But then for various reasons, including the fact that we were seen to be one of the faster growing spaces, and some of our concerns were getting addressed, surely over a period of time, we also participated in the global rally. March saw a very sharp up move. Post that up move, frankly, we believe that valuation comfort from a large part of the market is gone, especially in a situation where we see consumption to be slowing down. So that is the case just now. In terms, we believe this could sustain because the story still remains intact. We are looking at strengthening of growth prospects as we go forward. We tend to get very much bogged down by the profit growth number, and that number has been very, very volatile because of several one-offs that have been happening. But I guess if we look at the sales growth number, then sales growth has moved up from something like 7-8% last year to 12-13%. 13% last quarter. This quarter could be like 12% growth. So I would take some hope from that and still stay invested.
I think we were just chatting with Samir Arora, and he was of the view that the market has already priced in whatever outcome, or rather the best case outcome from the elections, that if the BJP were to come back to power, he says you're not going to really see the market run up way too much from what it already has in the month of March. Are you also working with that assumption? I mean, he was obviously assigning that after a two-day reaction, you may actually see the market fall 5 to 10% also. But besides that, would you say that around 11,700, the best is already baked in and in the price?
No, so that is exactly what I said.
Sure.
Valuation comfort doesn't lie after the 8% jump in the market over the past 1 month kind of a period. We are pretty finely valued practically across the spectrum. Maybe to our mind, financials still offer some bit of an upside. That said, we believe there is a great chance of market holding out strong through the election and after the elections. We sense that a lot of money has gotten staggered before and after election, wanting to be on both the legs because the election outcome at the end of the day is uncertain. And we also do sense that there has been significant postponement of investment by foreign money, till after the uncertainty is resolved. So if the uncertainty resolves, we should expect sustained flows for some time. That said, there is this MSCI sword that is definitely to be kept focus on. If China weightage goes up, India will see a reduction in weightage, and that could amount to a very significant cut in flows. But that happens September, October, later in the year rather than just after the elections.
Financials and tech, that's where you're seeing potential. Prateek, just talk us through, the kind of upside you're anticipating, the kind of growth you're looking at, when it comes to both these segments. And even on valuations, you're seeing comfort, particularly when it comes to IT. Talk us through that.
I just talked about financials. Looking at IT, I think that's one space which is growing. I would say the growth is accelerating. However, it would still be in early teens or just about there. It falls significantly short of what we want from our businesses, and hence we have largely stayed away while we have some exposure there. In terms of financials, we believe that's one spot in the marketplace where the growth and valuation comfort and the combination exists like no other space. It is not across the board. It is not in standard products. People tend to confuse corporate lenders and retail lenders. Retail lenders were better before, corporate lenders are better now, etc. It is in non-standard products where the specialized entity alone is able to do well and hence can continue to grow for a length of time. So the spaces that we are positive about are credit cards, personal loans, SME loans, two-wheeler loans, consumer loans, gold loans, microfinance kind of spaces, which are all high yielding. By themselves, high ROE businesses and non-standard. So people who specialize in this space can continue to grow with low penetration of finance. So the runway to grow is also there. So that is basically what we are focused on. Don't like housing finance much. It is less risky, agreed, but at the same time it is very standard. What people make will not make more than a 10-11% ROE for them if the lending is to retail borrowers. If the lending is to builders, etc., then while as a pool it is perceived to be safe because it belongs to a housing finance company, it can actually be very, very risky.
Prateek, if you could just give us a quick answer, where do you think we could see earnings hits and misses in Q4?
Earnings hit?
Hits and misses.
Okay. So financials is the biggest hope for this quarter. What has happened is last year, same quarter, we had negative numbers from many of the corporate lenders. That will turn positive. So that's a 50,000 crore swing that we may see in that space. Apart from that, cement should do well on better pricing. IT should do well, so they continue to deliver growth. So this is not a strong quarter. Number of days are lesser, but yet sequentially YOY and exit for IT should be better than before. Oil refining and marketing should do well because of higher oil prices and better marketing margins over last year. So primarily inventory gains will drive profits there. Metals would be weak on a YOY basis. Large companies like Reliance may be flat. So that is the sense that we have just now. FMCG companies, I would believe, would be a tad softer. So that's a space of concern for us. Autos is well known. I mean, the numbers there have not grown, and it is a high on operating leverage kind of businesses. So that will hurt on the negative side this quarter.
All right, thanks so much for joining us this morning, Prateek, and sharing some of your views with us. And overall,
Thank
looking
you.
outlook there looking positive.